Snapchat that is up over 36% on their earnings. So we're going to go over why they are up so much, what I think is actually going on with the stock, and I'm going to go over a position that I took on Snapchat today. So sit back, relax, and let's get started. Do not know, Snapchat had earnings yesterday after hours, and what an earnings it was. We're going to go over the indicators that I'm looking at right now for those of you who are new. We're going to go over why exactly they went up so much and really where I see the stock going in the coming days and weeks. And I'm going to talk about a position that I took on Snapchat today. So first of all, on CNBC.com, we'll see the headline that Snapchat soars on strong growth in revenue and daily users. So Snap on Tuesday announced its earnings results for the first quarter, sending the price up 20% in after hours. Now we know today it had a crazy day, up much more than that. The company's revenue came in at $462 million, up more than 44% from $320 million the company reported in the first quarter of last year. Guys, 44%. That is insane. That is nuts for, yes, they're still a growing company, but that is pretty crazy. For a company of that magnitude to grow 44% year over year is nuts. So Snap on Tuesday announced its earnings results for the first quarter, obviously sending the price up. Here's how the company did. Loss per share, 8 cents, which was adjusted. Revenue, we talked about that, $462 million. What people really look for in platforms and social media, and even something like Netflix that also reported yesterday, is their global active users, which is 229 million, up 39 million or 20% from last year, which is nuts, guys. So obviously amazing earnings. Now, does it warrant for a move this big? Yes and no, and I want to talk about that. So technically, over here, for those of you who do not know how to read charts, I do have tons of videos on it. I will link my academy down below. It's 100% free for your first month. But taking a look at the chart, we did see a bit of a golden cross happening here before earnings. We had this push up to the Fibonacci, the 50%. We retraced all the way back down to this Fibonacci level. And technically, we were kind of looking for a bounce, but a huge rip broke right through this price on the 50% Fibonacci, went all the way up. And now this was the end of day yesterday. I'm sure a lot of people got killed today, and we're going to talk about what a short squeeze is as well. So it was right around this level that you might think we are going to be rejected from this Fibonacci level. And so we, come near it about 1, 2, 3 times. And then this morning, this thing intraday, we can take a look, see here, boom, huge push up throughout the day, which is nuts. And so let's go over what I took. And here's the old Robinhood. So I have 5-1, so May 1st, Snap $15 strike price puts. Now, in a position, we are currently down $400, but it's only 20%, so I'm not too worried about that. When you're purchasing positions like this, when a stock is going up and up and up on earnings and there is no signs of going down, you have to act accordingly. We're going to talk about the different buy-ins that I took and why I took them. But what I think we're seeing here is a mix of, yes, great earnings are happening, but I think it's also a mix of a short squeeze. Now, for those of you who don't know what a short squeeze is, it's essentially every single move that you make in the stock market, whether you're trading $1 or $1 million, market makers can see that. And so what tends to happen is, obviously, when Snapchat broke through these both Fibonacci lines, touched up here, this was really, really overbought, guys. I don't know who the hell is buying Snapchat up at these levels as a long-term investment. This is not a good deal. I mean, 44% year over year, that's great, but I wouldn't be buying at these levels. So you have a ton of people coming in shorting this. You have a ton of people coming in with puts. And so what a short squeeze is essentially when these market makers, the people with billions and billions of dollars who can collectively control the market, to an extent, they see all these put orders coming in. And so what they do is they just continue to drive the price of the stock up and up and up. And retail investors like ourselves actually end up getting killed. All of our premiums on our options are going down and down and down. Some people hit their stop losses. They lose enough money to where they decide they want to get out. People like me, use proper risk management, but I average down on my positions because, and we're going to talk about that in a couple minutes, how I bought in and my strategy for that. But you get all these people just getting killed. And then once we hit, and I'm not saying that's, this level right here, but once we hit a point where the market makers basically have taken enough profits from the market, they have destroyed enough retail investors, premiums are super, super cheap, then they buy the puts that are discounted and they dump the shares, and there's no one there to buy it, and it falls and they make a ton of money. That is what is called a short squeeze. You're squeezing out, if you ever heard weak hands, they're squeezing out the weak hands, but we have strong hands around here. And we're going to talk about that too. So it's kind of what I'm seeing here. I don't see how long this can really hold up in these levels, but it can hold, and it can erase some premiums and the theta and all the other things that come along with options in that situation. But for me, we're gonna go over how I purchased, why I purchased. One thing, if we take a look over here, this is our option. If we're looking at it on TD, I put it on the Robinhood account because of the academy that I run. A lot of people like learning options on Robinhood, so I just put it on that one. It'd be easier, but insane amounts of volume today, guys. 20,339 volume. We only had 57 open interest before this. So this is a very, very popular option. But let's take a look. So if we come over here to Snap, let's go to the history. Okay, so this was right around market open when we had that first initial push. Let me make this smaller so we can see. When we had this first initial push, I bought in when Snap was around $15.52. I went in with $415 or 5 contracts. Anytime that I take a position, I always plan to lose money at first. I always split my buy-ins at least 3 or 4 times, usually 3. So I went in with $415. That's okay. We kept pushing. I went in with another 2 contracts for $130. Kept pushing. Went in with $183. We kept pushing. Went in with $450. Kept pushing. I set a limit. Didn't get filled, and then right before market close, I was like, wow, this is really, really, really pushing, and I went in with 20 more contracts, which is going to be my last buy-in, which was $780. So I always recommend, no matter what you're trading, split your buy-ins, especially in a situation like this when a short squeeze can happen, because I will guarantee you guys, it's not going to stay up here for long. We will see a fade. It just depends on how long. It could take a week. It could take a month. We'll see what happens. And, you act accordingly. So I just wanted to make a quick video on this on Snapchat. Give me your thoughts. Let me know. Are you guys in Snapchat? Did you play the opposite? Did you make huge gains off of this? Or were you somebody who got killed, because you had puts? Let me know what you're doing. I will, of course, keep you guys posted on this play. If you are interested in signing up for the Academy, we will put the link down below. Use the code freeacademy to get your first month 100% for free, guys. We did that because I can't say it. YouTube doesn't like it, but the whole situation going on, a lot of people losing their jobs. I don't want that to be a reason for people not to learn about the stock market and not to build a skill that will last them forever. So let me know what you guys think. Let me know what you're doing. Comment down below, subscribe, and I will see you guys next time.